Another week of 2% inventory increase this week. Normally, inventory starts declining with the back to school season. So what's going on? And what does that mean for home buyers and sellers? That's what we're looking at this week in the Altos Research Market Update. Each week, Altos Research tracks every home for sale in the country, all the pricing, all the supply and demand, and we make those analytics available to you before it becomes available in the traditional data channels. So let's see what the data says for the week of August 23rd, 2021. Available inventory of single-family homes unsold in the US climbed another 2.2% this week to 431, almost 432,000. That's a large gain for late August. Normally, by this time of the month, inventory has peaked and is falling each week, or maybe is moving by just a tiny fraction of a percentage. You can see in the chart here, most years is a multi-week slow curve when the last of the summer sales season gets done. The real inventory decline starts happening in November before the holidays. Last year was the opposite, of course, and put us in this crazy shortage for 2021. Since then, everything has been extended. Normally, the fewest homes on the market happen in January, sometimes February, but this year wasn't until the end of April that the market bottomed. Demand was so intense earlier in the year, and so that our bottom of the market was extended by several weeks or a couple months. Now inventory is growing by 10,000 unsold homes each week. The peak of the market has been shifted later in the year as well. So what's going on here? Are these pandemic distressed homeowners? Are they unable to pay their mortgage and need to sell right now? Are they merely sellers taking advantage of a still hot market? Here's what we know. We know that mortgage delinquencies keep falling week over week. The number of people who are behind on their mortgage is very low and falling. In other words, very few people are being forced to sell. Now, some of these listings may be people unloading the home that they'll never really be able to afford, and they're selling into a strong market. But frankly, I can't find any anecdotes of that when I talk to our Altos Research subscribers, the thousands of realtors and brokers around the country who use the Altos reports every day. None of them are really reporting any rush to listings from distressed sellers. So maybe we simply have sellers who are eager to test the waters. They held off earlier in the year, worried about the pandemic or the economy, and now they see that, it's still smoking hot, the demand is still there, and they're more willing to list even though it's later in the year than they normally would. So that's frankly what it feels like we're seeing here. In fact, if we look at our immediate sales tracker, we still have 24,000 new listings going into contract essentially immediately upon listing, within hours or days. There's a lot of deals getting done very quickly. The sellers know this, so they watch the neighbor's house go in just a day or so after listing. They say, well, heck, now's my chance. So of the 105,000 new listings that came to market last week, 24,750 of them went into contract essentially immediately. Here's another way to look at demand. The median market time right now is just 28 days. Normal time for the end of August might be like 9 weeks or 10 weeks, but this market is only 4 weeks. So, if you're a seller in a normal season, 9 or 10 weeks from now is November. And nobody wants to have their house, sitting on the market as we plunge into winter and the holidays. So normally this time of year, sellers start backing off. This year, sellers are seeing the deals get done today or maybe, September, and that feels fine. So let's sell, right? As a result, like the rest of the year, the market is getting extended. So how does that affect our projection of inventory for the year? If the year had followed its normal seasonal curve, it would have peaked early August. But this year stretched forward, and the transactions are happening later in the year and the volume is extended. So just a month ago, I was saying that we might peak at only 400,000 homes in early August, but each week we keep adding a couple percent to the active unsold inventory. So is the peak now looking like a September, 460,000? Does it stretch even further into October and we peak closer to 500,000? So if that's the case, do we finish the year with higher inventory than when we started? That still looks unlikely to me, given how crazy it was in the first and second quarter this year, but it is possible. And so we're going to keep watching that here. This chart shows us at each year and the inventory cycles of each year. The dashed line here is how we might project the rest of the year going forward. Really, this looks like a market that's trying to get back to normal levels of inventory, normal levels of people interested in selling, transactions happening, and getting us closer to 1 million homes on the market. And that brings us to prices. The median home price of single-family homes in the US ticked down a fraction this week to $389,990. You should expect prices to move sideways like this until November. Home prices peaked last month at $399. So this curve doesn't indicate any fear or urgency in new sellers like that we've been talking about. You can see the annual cycles here in the dark line, and the fourth quarter and last year and the first quarter this year is where we had our most unusual, unseasonal period. So now is much more normal. The median price of the newly listed cohort, that's the light colored line here, dipped down to $350,000 this week. You can see in the lighter line here that this is down only marginally from the July peak. Normally, the new listings peak June 30th, and then they drop quickly later in the summer. I try to point out how powerful the signal here is. The price of the new listings is the leading indicator for future transaction prices. New sellers watch every week very intently what their neighbors is happening with their neighbors. So they know there are buyers, they know how big the bidding wars are, they know how fast the sales happen. So if I watch my neighbor list their home and suddenly not get the bidding war that everyone was expecting, what do? I list lower. If, like, I don't want to get stuck. So alternatively, if it's mid-August and I see that demand is plenty high, they got their offer. And I also know, though, that I'm a couple of weeks later, it's almost September now, but I know the demand is there. Now I list only a fraction of the price. So if I see demand weak, I cut my price big before I list it. I don't want to get stuck. If I see demand strong, I'm just ticking down a little bit because it's a little bit later in the year. And that's what we're seeing here. Even as inventory is climbing, the market is telling us that demand is strong enough to support the transaction prices several months. The deals are not going to happen for several months from now. Okay, that's all the time we have for today. Inventory keeps growing at a surprising pace. Does it peak in September, October? Do sellers who come to market this late in the year, have they missed their big opportunity. It is looking like the best opportunity of the year for buyers anytime in 2021. Does that improve from here? So those are the data points that we will keep watching. Stay tuned for the details. And if the market changes, you'll see it here first. Until then, for those who need to see the data for your local market, just go to altosresearch.com and run a report. Agents and brokers, make sure you request a demo to get some time with the team at Altos, and we'll show you exactly how to use the data to reach your clients, to help your prospects and clients understand how to make their best decisions right now. As always, subscribe to the YouTube channel to stay in the loop. All right, everyone, more next week. Thank you.